Completing a W-4 is commonplace when starting a new job and required in order for your employer to withhold tax from your wages. Even though every person earning wages must complete one, the form is confusing to many. A W-4 is completed so your employer can withhold the proper amount of federal income tax from your pay, based on your marital status, number of allowances, and any additional amount you may choose to have withheld. A new W-4 should be completed for a new job or life event that triggers changes in your tax liability: marriage, a new baby, divorce, or loss or gain of another job. The number one rule to remember for the W-4 is this: the more allowances you claim, the less tax is withheld. Claiming zero results in the maximum amount of tax being withheld according to your tax bracket and income. You must claim zero if you are claimed as a dependent on someone else's tax return. You should claim one allowance if you are single and have only one job, or you are married with one job and your spouse does not work. Claiming one usually results in a tax refund after your personal exemption or standard deductions are factored into your taxable income. You can also claim additional allowances to reduce the amount of tax withheld from your pay. Examples of additional allowances include the number of dependents you claim, if you qualify for the child tax credit, or if you claim child or dependent care expenses on your tax return. You can also use page 2 of the W-4 to reduce tax withheld according to your itemized deductions, tax credits, or income adjustments if you receive dividends or interest. We often have married couples who owe tax and wonder why. When a household has more than one income, and especially if one spouse earns significantly more than the other, it's important that you have tax withheld properly so that you don't owe tax when you file your return. Your withholding will be the most accurate when all allowances are claimed on the W-4 for the highest paying job and zero allowances are claimed on all other W-4s. You can also use page 2 of the W-4 for more detailed instructions. If you find that you owe tax at the end of the year, you should adjust your W-4 by lowering the number of allowances you claim. If you intentionally claim too many exemptions, you will end up not paying enough tax through withholding for the year. This could subject you to underpayment penalties and even interest, so it pays to get the number right on your W-4. There is also a withholding calculator tool on the IRS website you can use to help you complete your W-4. The calculator will have you enter in figures from your most recent paychecks, along with deductions, and then it will give you your anticipated income tax and your likely refund or tax due. It will also recommend the number of allowances you should claim on the W-4 for each job. The tool is very helpful for 2-income households. Remember, the W-4 is to make sure enough tax is withheld from your pay so you don't owe tax when you file your return. You can even set it so you receive a refund. Keep in mind, the more allowances you claim, the less tax is withheld.